is Luke Robinson, and I'm a business advisor here at Collective. And Collective is your all in one back office solution. We're essentially an all in one tax company. We'll handle your uh, bookkeeping, your payroll, we'll handle your business formation, your tax filings. And we also just provide sort of general business tools that you can use to run your business. But today we host every Tuesday, we host an exciting event we like to call Tax Tuesday. And essentially, it's just a tax AMA. It's an Ask Me Anything session to where you can ask me anything about taxes. And I'll do my best to answer them. And please, feel free to ask general business questions and general accounting questions, um, general administrative business questions. That's all fair game. And first, just to kind of get the legal stuff out of the way, keep in mind that this is just an informational session. Like, don't consider this official tax advice, official legal advice. I'm not an attorney or anything like that. So before, acting on this information or doing anything official, seek out a tax attorney or a CPA or some sort of tax professional. But now that we've got this out of the way, let's go ahead and get started on answering some questions. And we already have quite a few that have rolled in. And the first one is, I do marketing consulting, which, by the way, is it's a pretty popular industry right now. And there's people that are making a lot of money just doing online marketing, digital marketing. I speak to a lot of marketing professionals day to day here at Collective. But the question is, I do marketing consulting. Should I go LLC or should I go S corp? And with so many, a response to that, which is similar to so many responses about with questions asked about taxes and what you should do with S corps and stuff like that, is it depends, and that largely depends on how much money you're making, whether or not you should go the S corp route. And then, first off, I would say too, let's talk a little bit about S corps. There's a lot of people that have kind of a misrepresentation about what an S corp actually is. An S corp isn't a business entity or anything like that. It's a tax election. So an S corp, it isn't a corporation. So you either have to be you have to be an LLC first or something like it before you can elect S corp tax status. So it's not like a question of whether or not you should be an LLC or an S corp. You should try to answer the question: should my LLC have an S corp election? And the entire reason why you'd want to ask that question or consider an S corp is to save on the self-employment tax. That's what an S corp election is there for. Before you become an S corp, essentially all of your money is subject to the self-employment tax. And that is the self-employment tax, it's a flat tax rate of 15.3%. Before you make an S corp election, all of your money is subject to it. So for essentially all of it. So for example, let's say that you make $150,000. How you'd come up with your self-employment tax before you became an S corp is you take 150K and you'd multiply it by 15.3%. But when you make an S corp election, pretty kind of what it does essentially is it creates kind of like an employee-employer relationship, between you and your own business. And since you're employed by your own business now, you will pay yourself a salary. Your business will pay you a wage, a W-2 wage, just like you'd receive if you work for someone else as a W-2 employee. But the sort of advantageous thing about S corps is that the only chunk of your earnings that's now subject to the self-employment tax is what you choose to pay yourself in salary. So, for example, let's assume that you that your business makes 150K, 150 grand, and let's all with an S corp, and let's also assume that you pay yourself 80 grand in a W-2 salary. That first 80 grand is still subject to the self-employment tax. You still pay it. But the other 70 grand, or just the rest of your money, outside of your salary, that is considered distributions to yourself. You can kind of think of them another way to think of them as kind of like dividends. Um, that chunk of money is not subject to the self-employment tax at all. So, assuming that you made that much money, you would take that 70 grand and you'd multiply it by 15.3% to see how much an S corp would save you in taxes. And what is that? That's $10,710. So, changing your tax selection can save you quite a pretty penny. Can I write off marketing platform development? Absolutely. Yeah, that's a business expense. You can write off marketing expenses, platform expenses. You can certainly write that off. Can I write off business coaching? Sure. I don't see why you couldn't write that off. Like you're paying for coaching specifically for business. Like that's a business expense. So that's like anything else, like like an advisor or something that would also be a business expense. How do I determine my reasonable salary as an LLC taxed as an S corp? That's a great question, and that's one of the main sort of areas that small business owners struggle with when they have S corps. And because that's what the IRS says. The IRS says that when you're an S corp, you have to have a reasonable salary. Because people will ask me, they'll say, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself like a super low salary? Why not just pay myself $10,000 or $5,000? And the response is that it would put you at risk for audit. It would be The IRS says that it has to be reasonable, so it can't be too low, is what they mean. And really, the frustrating part about it is that there's no objective sort of measure for a reasonable salary. There's no set standard or anything like that. So it's just kind of a facts and circumstance test. So what you do is, like, when coming up with your salary, you can take a few things into consideration. You know, how much money are similar professionals? How much are they making? Doing the same kind of job that you are. How many hours a week do you work in your business? How many years of experience do you have? Where do you live in the country? Things like that. You can use all of that to kind of come up with a method to come up with a salary amount. But that's also why it's important to have like the support of a tax professional or a tax company, like Collective, that can help you and kind of guide you on how you should pay yourself and how much you should pay yourself. How to determine how much I can contribute to a solo 401k as an LLC taxed as an S corp. Honestly, the rules on that are complicated and they're kind of all over the place and they're different for each type of retirement account. So honestly, all I can do is point you to some resources on there. Go to collective.com and go to our blog section. We've got tons of great resources on retirement account limits and things like that. So absolutely. Who can I speak to? Who can I speak with about a sponsorship for a virtual event? Absolutely. If you don't mind, send us a direct message on Instagram, and someone will get back to you about that. All right, we've got some more questions here. What are the key tax deadlines I should be aware of as a small business owner? I've always been W-2 and never really had to worry about deadlines. Well, yeah, unfortunately, there are additional tax deadlines that come up when you're a self-employed business owner. And one is the estimated tax deposit deadlines. Because when you're self-employed, there's no employer that's kind of deducting money out of your paycheck and paying it to the government in the form of taxes or anything like that. So the government requires that you pay estimated tax deposits quarterly to pay your taxes throughout the year. Now, and if you don't do that, like if you miss the quarterly deadlines, you could be penalized. And the deadlines, they're each one of them is a month after the quarter ending. I'm sorry, the 15th of the month after the quarter, after the ending quarter. So like the first quarter is January, February, March. Your first estimated tax deposit is due by April 15th for that first year, and then so on and so forth. And then the last one, ending December, that last quarter, that one is due by January 15th of the next year. So that's one really important deadline. And then, of course, if you're an S corp, you have the S corp deadline. You have the S corp tax return deadline that you have to file every year, and that deadline is March 15th. You got to file that return. And then, of course, April 15th. That's the last one, and that of course is your personal tax return deadline. So there's that, and but those are the main deadlines, I would say. What are the advantages of having an S corp versus other corporations? Well, the only advantage to having an S corp is to save on the self-employment tax. So that is literally the only thing. Now, typically, you can be one of two things when you have an S corp election. You can either be an LLC or you can be a corporation, a C corp. Either one of those can make an S corp election, and they're taxed the same way once they do. But the thing is, the only reason why you'd want to have like a corporation, and this I think gets us into our next question here, but the only reason why you'd want to have a corporation as kind of the foundation for your S corp is if you ever wanted to, go public or issue stock in the company or have more flexibility in terms of ownership of the business. So that's really the only reason. But that doesn't apply to a vast majority of small business owners. Most small business owners need an LLC with an S corp election. Now, the thing about it is that also usually people don't need corporations, and they also have additional administrative requirements. You have to have a board of directors. You have to keep board meeting minutes when you have, board of director meetings. You got to keep a corporate ledger, things like that. You don't have to do that with an LLC. So when you set up a C corp, usually you're just setting up something that's more complicated with no extra benefit, and you typically don't want to do that. Do most of the big top 100 companies utilize S corp elections? No, they do not. And the reason that is because most of the top companies in the US are corporations, are C corporations. And they're C corporations because they want to issue stock. Like they want to sell stock to millions of investors across the country and the world. You can't do that with an S corp. You can only have with an S corp election. You can only have up to 100 investors, up to 100 owners in your business with an S corp. So it wouldn't work out for huge companies. But usually small business owners don't have more than 100 owners. So the S corp is usually, not always, but usually the S corp is the correct route for them. Is it true that if you decide to involve investors, it's better to have a C corp? Well, it can. It is a little bit easier to have investors when you have a C corp and whatnot, but you're also dealing with, additional taxes. You're dealing with, the double taxes. You're taxed at the corporate level, and then you're also taxed at the investor level. So if you can make it work to where you can have an S corp, it's usually more advantageous. So if you have an S corp you've had for several years with no pay due to low earnings, then it makes you vulnerable to audit. That's a great question. That's Elena from Instagram. No, not necessarily, because the thing is, really, what's dangerous in terms of audit is when you pay yourself a low salary when you have a lot of earnings, when you have high earnings. Because what's important is when you make a lot of money through the S corp that you don't pay yourself too low. But if you make low earnings, then absolutely it makes sense that you pay yourself low in salary. So audit is less likely, and adverse action is less likely, because if your business only makes $20,000, then it makes a lot more sense that you've paid yourself 10 grand than it would be if your business made $100,000. So no, it shouldn't make you any more vulnerable to audit since you're making less money. Our small landscaping business purchased a truck. Can you explain depreciation? Our business didn't make a profit this year. What's the best way to write off the truck? Well, in some situations, you can do, and this doesn't apply to every situation, so it might not work here. So before you do anything, I definitely go to a CPA or a tax professional before you act on what I'm getting ready to say. But you might be able to do what's called a Section 179 deduction, and it kind of lets you accelerate depreciation and it lets you write off a big chunk of the truck, in one tax year. So that's what I would suggest is talk to a CPA about that. Does Collective work with businesses who were S corps but may now want to just operate as an LLC? No, as of now, we only work with businesses that have and want to keep that S corp election. But the thing is, though, the cost of Collective just monthly is typically the cost of a general bookkeeper. So since it doesn't it would usually be the same price even if you just had an LLC. So you might as well just keep your S corp and let Collective run it for you, since it's not going to save you any money to go back to an LLC. All righty. This is a good question. How does the IRS define a business expense? Well, the IRS says that the business expense has to be ordinary and necessary with your business. So it has to be like an ordinary expense, and also something that the expense must exist like exclusively because you're doing it for business. So a lot of people think that if you just go and just like go to a coffee shop and just like think about your business, that you can write off your coffee and things like that. But you can't. That's not a business expense. That's not necessary and ordinary for your business. But that's the definition. For this upcoming tax year, can I be switched to an S corp, and would it be backdated? So yeah, for this upcoming tax year, absolutely. If you haven't, what we would do is we'd set up an LLC and then make an S corp election starting January 1st of 2024. Um, so what we would do is just like start running payroll and start you off as an S corp for 2024. But unfortunately, if you don't have an LLC or anything like that, then you can't backdate an S corp election. You've got to have an LLC in existence. How can one scale with Collective, since it's all about the solopreneur? That's a great question. And really, when we say solopreneur, that mainly has to do with ownership in your business. But there's a lot of Collective members that have several contractors that help them out with like their operations. And that's totally fine to have as a Collective member. And so like there's a lot of people that run, $1 million operations, $1 million plus operations just by operating with contractors. And having contractors is totally fine with a Collective membership. And also too, with an S corp, Collective will be running your payroll. They'll set up your business, run your bookkeeping on an ongoing basis, and filing your tax return at the end of the year, your business tax return. But a part of your payroll is like, let's say that you have contractors that you pay. You can use Collective's payroll to pay them, and it'll issue all the tax paperwork and have everything handled. You can, it's definitely, as you scale your business, Collective can be a great partner for you. All right. I pray pretty, which I love that username, by the way, is interested in Collective. So essentially, what you can do a couple things. Send us a message on Instagram saying you're interested, and we'll get you scheduled with a business advisor that you can kind of go through your situation and see what we need to do next. Or you can just go to the Collective website, collective.com, go there and schedule a call, and we can talk about next steps. And I would do that, especially if you don't have an LLC set up or anything like that. I would do that as soon as you can, just so we can ensure there's enough time to get you prepared for 2024. Okay. I think we have another question rolling in here. What's the link between Collective and QuickBooks? Well, we have our own accounting software. So you would actually, if you came on board with Collective, you could cancel QuickBooks. You wouldn't need them anymore, and you could use our accounting software for invoicing and anything like that. Chris, we actually don't use Zero anymore. We have our own software now. It's embedded right in your Collective dashboard, so it's a new development. If I run expenses from my personal account instead of my business account, can I still get that written off? What if it's a large amount? Yes, usually you can, if you have an LLC, you can usually still write off expenses that come out of a personal account. But there's specific methods and stuff to do it. So I would get the help from a tax professional. But you could still do that. And even if it's a large amount, that shouldn't be a problem. But also just keep in mind that, you know, your LLC is there to kind of separate your business life from your personal life, and separate your business finances from your personal finances. So keep in mind that kind of commingling and things like that. That kind of it helps to pierce that legal shield between there. So I would just try to do that as least amount as possible. What do you guys provide on the free calls? Well, essentially, the calls are just kind of there to see if Collective would be a good fit for you, for your business long term. So we'll go through your situation, kind of see if an S corp might be a good idea for you, and go from there. Can I claim my vehicle expenses for my personal vehicle? And if so, how do I do that? Um, the easiest way to do that, honestly, is to write off just the standard mileage deduction, which is just a standard mileage rate, like 60 cents or something like that. It might not be exactly that much, but it's around there. And you just take how many business miles you've driven and you multiply it by that rate. So it makes it pretty easy to write off your vehicle expenses. Are there tax advantages to hiring independent contractors over employees? There definitely are tax advantages to hire an independent contractor, to 1099 contractors over employees. And the reason that is because when we were talking about the S corp earlier, like saving on the self-employment tax, the self-employment tax, that's 15.3%. What that is Social Security, Medicare taxes. That's literally what the self-employment tax is. So when you have, for example, when you have W-2 employees that you pay half of their Social Security and Medicare taxes. You pay half of that 15.3% for them. So that's what happens when they're classified as employees. But if they're classified as contractors, like if they're 1099 contractors, they are responsible for their self-employment tax. You don't pay half of it, and they're responsible for it. But the thing is, though, it's not really up to you whether or not to pay yourself to pay your people as contractors or employees, because the IRS has like very specific rules like surrounding that. So it has to do with their circumstance. It has to do with just sort of facts about the circumstances, whether or not they should be employers or contractors. It's not really up to you. Is it better as a freelance artist to have an LLC? Generally, it's just usually better to have an LLC, just to kind of separate your business life from your personal life. Now, of course, it might be less important for a freelance artist to have an LLC because because you're probably a little bit less like, and again, I'm not a lawyer, so I'm not an expert on these matters, but you're probably less likely to be sued like as a freelance artist or like someone like that than you would like than some other kind of more dangerous industry. So like you probably have a little bit more less risk to litigation and whatnot. So it makes an LLC a little bit less important. But still, in my opinion, it's usually just better to have that for your business, regardless of what industry you're in. How do you set up multiple LLCs under an S corp? Well, that can be really complicated, and I definitely before you do any of this, I would definitely, get with a CPA or a tax attorney, because this is it can be complicated. But what you can do is have some sort of management company to where you have several sort of LLCs at the bottom, and then have an LLC on top, and then the LLC can kind of serve as a management company for all those other LLCs, and then the S corp election can be made on the management company. But again, I would go to a tax attorney before you did anything like that. What does the ideal long-term relationship look like with Collective? Well, forever. As long as you run your business, Collective would be useful for you. And you've got two ways to pay. You can go the annual route. You can do it like, you can pay for the Collective membership at, 12 months at a time. And if you do that, they'll give you 15% off the total price. So that would be the most advantageous. And then, because let me just kind of explain what Collective does. The first thing we would do, if you didn't have any sort of business entity set up or didn't have your S Corp set up, the first thing we'd do is set up an LLC and then make an S Corp election on that. And then from there, we'd run your payroll on an ongoing basis and then handle your bookkeeping on an ongoing basis, just, month to month, monthly bookkeeping. And then also too, just, throughout the year, we provide tax support. You have a dedicated contact that you can, talk to at any time, reach out to at any time. And then as we run your books throughout the year, at the end of the year, we will file your S Corp tax return. So you can kind of think of us as kind of like an all-in-one solution for an S Corp. And now it's a really good time to, kind of have that conversation with us, especially, going into 2024. It's important that we move to start, setting up businesses so we can be prepared. So please, go to our website, set up a call with a business advisor, or send us a message on Instagram. And we'd love to get you set up with a call with an expert to go through your situation and kind of give you a roadmap on what you need to do next for your business. I think I have time for one more question. How often should I reconcile my business accounts? You should reconcile your bookkeeping monthly, I would say. Certainly, month to month. How do you compare to Bench? What's unique to Collective? Well, I would say that, and I speak to a lot of people that have a lot of experience with different tax companies, and I would say that generally the perception is that we're more comprehensive than most companies out there. But again, I encourage you to have a conversation with us and see what we're all about. But that's actually all the time that I have today. I actually have a call with a prospective Collective member. But thank you all so much for another exciting Tax Tuesday, and I can't wait to see you guys next week for another one.